Hello, I am excited about this video. I am going to tell you exactly how I got into the stock market, okay? Some of you, a lot of you, many of you are saying, I'm ready, let's go, I want to do this, I want to invest. So I'm going to tell you exactly what I did. I don't want you to think that it is oh so complicated, like you're waiting on all these videos to come out to tell you what to do. No, it is not that complicated. They have already made it complicated. Like there's this big smoke screen around the stock market. It is not that complicated. Now, is it serious? Yes, it's serious. But it's not that complicated to get into. And we're going to be smart, right? At this point in our lives, we're not just doing silly things. So please forgive the puppies in the background. I can't make them stop barking. But I wanted to make this video. And so, listen, I am literally doing what Warren Buffett said to do, right? Which is to invest in the S&P 500. Now, because when I started, I didn't have my ears tweaked, just like some of you are brand new to it. So when you hear the lingo, you hear it, but you think it's saying one thing, but it's really being more definitive, right? So let me go back. I'm going to rewind. I have several portfolios. Now, the one that I'm working on, that I started on this channel, it just happened to come about. It just literally happened to come about based on something I said in a video. But my portfolio that I have several portfolios that I nurture outside of the one that's on YouTube. So I started investing for myself. I started managing my own investments in 2020. I think it was 2021, early 2021. And prior to that, I was in the stock market. I had a professionally managed portfolio. Now, when I began to learn about the stock market, I started hearing certain things and was thinking, this is not that complicated. I could do this myself and save those management fees, right? So I just started YouTubing, and I don't even think I was YouTubing. I think stuff just started, I don't know how it happened, really. But I saw a video or something or other, and I said I could do it too. So I know what it was. I saw a video. It was the channel is Our Rich Journey. OUR, Our Rich Journey. And I love that channel at the time. And they're still a great channel. They have like 600,000 subscribers right now. But they're a young couple out of, I think, Flint, Michigan. I think it was Flint, Michigan. And they're on what's called FIRE, Financial Independence, Retire Early. So obviously that's outside of seniors, but you can still, work with some of those concepts, but certainly excellent for young people to know about the FIRE movement and to jump in with 2 feet. So I started hearing about, I heard about it through there. I think that was one of the channels of several, I'm sure. I just can't think of the others. But to make a longer story short, I started looking at my investments and I was like, you know what? I'm going to do this. So I opened up another account outside of what my professionally managed account. Now, that account was still going, but I wasn't contributing to it because I opened up another Roth account. So with Roths, you can only contribute at my age, at our age, if you're over 50, you can contribute $8,000 a year. So even if you have a Roth over here and a Roth over here, you can't contribute $8,000 to each one. You can only contribute $8,000 in total. You can even split it if you wanted to, but it still can only be $8,000 total. At the time, I think the max was $7,500. So I opened a Roth IRA, and I started with an index fund. And the index fund was VTSAX. Now, honestly, had I known, which I did not know about ETFs at the time, I did not know. I was literally listening to this couple, and I said, I trust what they're saying. I literally trusted what they were saying. And so I went into this ETF. Now, I will say this. Had I known about ETFs, I would not have chosen VTSAX. I would have chosen, from all the things that I know now, I would have chosen VOO, VOO. That's what I would have chosen. So VTSAX is similar to VTI, which is what I'm putting in the YouTube portfolio and the Fidelity portfolio. So I would have chosen VOO, maybe even VTI, because it is the total stock market. Pretty solid, very solid. So I did that, and then I just began learning more. So now at that time, I think VTSAX, which is right now, it might be like $140 a share. Well, when I started, it was $95. And so I would continually just put money into it. And then as I kept learning, like you all are going to be doing, I started adding some more stocks. Now, let me roll it back again. During that same period when I was buying VTSAX, I was also buying stocks in Robinhood. That was the first mobile app that I had. It was a very easy interface and all of that. So I was listening to people saying, you should do this. This is going to happen with this. And I think I was in a Discord or something, and they said, you should buy what? I was in, look, don't do it. Just don't do it. So I was in stuff that I didn't even know what I was doing. I remember I bought a stock. It was, oh gosh, I can't remember the name of it, but it was in Robinhood, and the stock did what the group said it was supposed to do. I bought the stock low. The stock went up, right? And I'm looking at the phone like, oh wow, $200, $300. Well, and I am looking at the phone literally like in glee, like, oh, $300. And then it started going down. And I was like, oh, it's going down. It's going down. Is it going to go back up? I wonder if it's going to go back up. I had no clue. This is how naive I was. Like, I didn't know anything. I did not know that in order for me to keep the money, I was supposed to sell the stock. That is how, I don't know if this is the right word, green. That's how green I was. I didn't even know. I literally watched the stock go up in price. It went up hundreds of dollars. And then right before my very eyes, it went down. And I was thinking, I thought that when it went up, it was mine. It came up in my account, then it was mine. I had no clue that I was supposed to sell the stock. So it wound up going down. I lost the money. And that was really pretty much my introduction. That was before BTSAX. That was pretty much my introduction, and you know, when you don't know, you don't know. So literally, it's like, yeah, when the stock goes up, it's only yours when you take the money. It's only yours when you take the money. Now, that is not for us, right? Unless you're balanced and you got it, your other retirement, you're set, and you want to play with the stock market. I mean, at this point in my life, I'm not trying to play with money. I'm trying to accumulate money. But I tell you what, that was my first experience in the stock market, looking at it go up and watching it go down. And so I learned that you were supposed to sell. I was learning on my own. I was hearing things, and I was trying to figure it out. So that's one of my fun stories about the stock market. And I just started learning on my own. So I did have some stocks early on that did not make any sense, any rhyme or reason. I didn't even know about, I wouldn't even say I knew about long-term investing. It's not, I knew the term, but when you know a word, but you don't even have any context for it. You don't know what it really means to long-term invest. Long-term invest, it did not mean hold it, and just because you had it 3 years, that's long-term, and now we're going to sell it. No, long-term investing in this scenario with the silvers, long-term investing in the stock market is decades, so you can get that compounded interest. And so I said I bought an index fund. I also said if I could do it again, I probably would not buy VTSAX. Okay. VU or VTI, I probably would. If you choose a different brokerage firm other than Vanguard, which I probably would choose a Fidelity or another brokerage that allows fractional shares. I think Schwab does also. Some version of the S&P 500, some version, an ETF that tracks the S&P 500, as opposed to the total stock market. So the total stock market is safe though also. And in another video, if I don't do it in this video, I'll put it up and show you how you can compare the ETFs, and you will see that they track along with one another. So either would be a good choice. So I did that, and then I wound up getting into some more stocks. Like the popular ones were Apple, of course. Microsoft was a big one. Lately, Nvidia was a big one also. I had already had Ford from years and years ago. So some Ford stock. So and then another ETF. So that's really how I wound up getting into it and just continuing to kind of follow it. And then I went into another direction in terms of investing. I went into day trading, learning about that. And that takes way more discipline than long-term investing. Long-term investing is buy and hold. Buy and hold. You buy a solid ETF, keep it simple. Buy a solid ETF, invest in it, and it's fine. Let it grow. Let it sit and grow. But it has to be consistent. You have to dollar cost average. It has to be on that same day, every that day. The time period has to be the same. That's the dollar cost averaging. That's how you're going to get the best price in it. Now, had I known all of that, and had I known that the historical move of the stock market is up, it has an upward trajectory no matter what happens in the world. You can go back 200 years. The graph goes up. 1929, the Great Depression. It went down and it came back up. Even with the last huge crises in 2020, it dropped. Millionaires were made in that drop. It came back up. This one thing I do want you to know, though, because even though I started in 2021, I still got like kind of, like antsy when I saw red in my portfolio, because I'm thinking I'm losing money. You're not losing money if you don't sell it. Not when you have the S&P 500 or the total stock market. So the idea, what you need to know is that when the stock market goes down, that is the time to not be afraid. That's the time to buy. There's a quote. I don't know if it's Warren Buffett or Charlie Munger's, but it says, when others are fearful, we're greedy, something like that. So when others are running from the stock market, selling out, they're selling out because they're like, I'm losing my money. So it's like in the Great Depression, like they started losing money and a bank said, hey, I'll give you 50 cents on the dollar. People were saying, yes, yes, yes. But in reality, had they said, no, I'm just going to hold it, they would have kept their money and some. So same thing with the stock market. When it goes down, even when it went down, if you pull up a graph for the stock market during the time of the 2020 crises, you will see that the stock market went way down. The people who sold, and many sold. That's why it was going down. The people who held and bought at the bottom, it made a ton of money. There were millionaires made during that time, because the adage is true: buy low, sell high. Even if you bought long term, you could have even, had I known, and I didn't know at that time, had I known too that was the time to buy, when the market was red, everything was going down. It wasn't a time to feel like the world is coming to an end. No, that was like, wow, get ready. That was that time. Now, I didn't know that then, so I missed that whole thing. But now I understand. Now I understand. So I want you to understand too. So I'm telling you, open a brokerage account. Pick one. Fidelity, fractional shares. I'm not sure if Vanguard does offer fractional shares in their ETFs, but I don't believe they do with stock, and I don't believe they offer recurring investments other than with their own product, their own Vanguard products. You can check with Schwab, do your own research. So you want to get into a brokerage like that. You just open it. I believe I did make a video that walked you through that. It says new investors, are you ready? Something like that, right? So you can open that. You pick an ETF. You can Google one. Google an ETF that tracks the S&P 500. But I do want to, though, you can, I'm not saying do it tonight and like get into it or anything like that. Of course, I can't tell you what to do. But I'm saying get online and start looking up things. Start practicing. So you can look up S&P's ETFs that track the S&P 500. They're going to come up. And then I'm going to show you a way to compare them online. Because what you are going to be looking at, though, is the expense ratio. So the whole thing with Warren Buffett is he said to buy consistently and at a low cost. So that low cost means an ETF has an expense ratio. We want to keep the ratios low. And Vanguard, they keep the ratios low. They were actually the leader in index funds. Charlie Munger, no, Bogle, I believe, started it. or was in the group of men that spearheaded the index funds. So you want to compare those expense ratios. Now, Fidelity's S&P 500, it's FXAIX, I think its ratio was like 0.015 or something like that. VU, I think, is 0.02. BTI might be 0.02. Schwab has one. SWPPX, I think it's a little higher at 0.03, something like that. And so we can talk about that in another video, but for all of you that are interested, are saying, let's go, I want to get into it. That is your first step. Just figure out, number one, what is your why? Why do you want to do this? What's your goal? Do you have a long-term goal? Understand that you're going to have discipline. This is not something that is complicated. It's been made all complicated. Not complicated. The only thing that's going to stop you is you being undisciplined, not holding it, taking money out of your account, all that. If you're doing that, this is not the same thing. That's not the same thing. You may as well have your money in a high yield savings account. So you look at brokerage firms, decide which one the interface works best for you, if it's easier for you. That is all you do. Most of them are insured by the SIPC. It's called the Securities something or other, SIPC. I'll have to look it up for you. I'll probably put it up on screen. The definition of it. They are insured just like the banks are. Some for more than others. I think it starts at 250,000. It might go to 500,000, something like that. So you're good there. And then you're gonna pick an ETF. And all I'm saying is pick an ETF. I would pick an ETF because that's what I'm doing. Would pick an ETF because it's got to be simple. And it's got to be the thing that's already diversified. Warren Buffett said, this is what you do. This is the greatest investor. He said, this is what you do. You do it consistently and you keep buying it. He said, through thick and thin, keep buying the S&P 500. So that is what you do. So if you have any comments, or any questions, oh yeah, please share, share, and subscribe to the channel and watch my other videos. This is one of the things that I'm doing as one of my side hustles to build up our nest egg. And so building up this channel's community is one of those things, and you can help me by watching my playlist, and that will help to not only give me watch time hours, but your comments also help with the engagement. So thanks for watching.